Hello students, you are welcome to this new week. As you know that this is our fifth week, the fifth week of our third term. So this week we'll be discussing balance sheet as a topic. We'll be looking at balance sheet as a topic. Balance sheet, as we all know, is one of the final accounts of a sole trader. The first one is trading account, followed by profit and loss account, and then the balance sheet. Alright, it is expected that by the end of this week's lesson, that you, the student, should be able to define balance sheet, define assets and liabilities, differentiate between assets and liabilities, to be able to list and explain the types of assets, then list and explain the types of liabilities. Let's start by explaining what balance sheet is. Balance sheet is a statement that shows the presentation of the summary of all the assets, all your assets, the presentation, how they are being presented on a table. Your land, your building, your plants, your machinery, etc. and all your liabilities in a well-arranged form, so that the position of your company will be ascertained financially. Alright. Then let's go over to assets. What is assets? Assets are those things owned by the company. Those things, those tangible things that the company owns that helps them to generate revenue, to generate income. Example, you have building, you have land, you have stock, you have debtors, cash at hand, prepayment, and so many of them. Those things that are owned by the company, they are the things we call assets that the company use to provide a future benefit. Now, the liabilities are those things that you, the company, you are owing the outsiders, the outside world, you are owing. So liabilities is not an income to the business. It is an expenses, because you have to dip your hand into your pocket to get money in order to pay for what you are owing. Alright, let's move to the differences between assets and liability. What are the differences? What are the differences between assets and liabilities? Number one, we have under assets, we have assets are those items that a company owns. Those items owned by a company, those things that belong to them. This asset helps the company in generating revenue for the company. It helps them in generating profit. They get money, they make money through it. Are you there? Then we have under the types, we have fixed assets and we have current assets. We'll discuss these two things before the end of this lesson. Now the next one, the number 4 on the list, said they are subject to depreciation. That is to say that assets can depreciate, asset can diminish in value, asset can reduce in value. Not the way the way asset is today will not be the same way it will be tomorrow. I hope you understand it. As you are using it, due to usage, as you are using it, the value is doing what? Is reducing. Then, well, asset result in inflow of cash, because it helps us to generate cash. So it results in inflow of cash, and as it is doing that, it equally increases the cash balance. Do you understand? Now, assets if you come to the balance sheet, the asset, you post the asset on the right hand side of your balance sheet, which is your credit side. Now, for the liabilities, there are obligations that the business or individual need to pay in the future. So it is an expense you have to pay. It's something that you are owing, and you really have to dip your hand into the pocket of the company, the pocket of the business, to do what? To pay. Is that clear? Then let's go. We have two types of liabilities as well. We have long-term liabilities and we have current or short-term liabilities. Then I said that liabilities, they are non-depreciable. They don't depreciate at all. They don't depreciate. If you are owing 1 million, you are going to pay 1 million. Do you understand? Liabilities result into outflow of cash. Outflow, the money will come from the business and be given to the person that we are owing. Is that clear? And then as that is happening, the cash balance of the business is doing what? Is decreasing. Now, liabilities come on the left side of the balance sheet, which is our debit side. The left side of our balance sheet is our debit side. All right. Over here we have our types of assets. Types of assets. Types of assets. Number one, we have fixed assets. We have current assets. We have liquid assets. We have fictitious assets. We have intangible assets. And then the last but not the least, we have wasting assets. Now let's start from the first one, which is the fixed assets. The fixed assets. Fixed assets are those assets which are of permanent nature and it creates revenues for the business. They are those assets that last for a very long time. Assets like building, assets like plant and machineries, assets like furnitures and fittings, assets like motor van, etc. They are fixed. They last for more than 12 months. So we call them fixed assets. Alright? Then the next one is the current assets. Current assets are those assets that can last for a short period of time. Not more than 12 months, not more than 1 year. Example, we have our debtors, we have our stock, we have our cash in hand, our cash at bank, etc. All these ones are what under current assets. Then the next one there is what? Is liquid assets. Liquid what? Assets. The next one there is what? Liquid assets. Now for liquid assets, they are those assets that can be easily turned into cash. Those assets that you can easily turn into cash. Example of such assets is let's say debtors, people that are owing you. Once they pay him, you've turned into cash. Your investment, those things are liquid assets. Now the next one is fictitious assets. Fictitious assets. Fictitious asset is one of the types of asset that we have. They are merely debit balances not written off. They are merely debit balances not written off. They are items of expenditure of unusual character which are not of any realizable value. Example is if you talk about preliminary expenses. All right, let's go down to intangible assets. Intangible. These are assets that cannot be seen and touched. They can be seen, they can be touched, although they have what? They have values. Example, we have goodwill, we have patent, we have copyright. I think we'll explain that. Later we'll explain that. Now let's finish with wasting assets. Wasting assets. Wasting assets are natural resources like standing timber, mineral deposit, oil that are physically consumed. Do you understand? All these things are examples of wasting assets. The mineral resources, they are wasted. They can physically be consumed. All right, let's go over to the examples of intangible assets. Examples of intangible assets. Let's start from the goodwill. Goodwill can be described as asset arising from good reputation. Goodwill can be described as asset arising from good reputation, connection, or other benefit of the business which helps it to generate greater earnings. Your good reputation, your good name, your connection, that is what we call goodwill. Then copyright. Copyright is the exclusive right granted by law to print, reprint, copy, publish, produce, or reproduce an artistic work or film. That is what we call copyright. It's one of the intangible assets. So next one is patent. Patent are the exclusive law granted by the government to sell, produce, use his product for specific period. Exclusive law granted by the government to you, the businessman, to sell or to use his product for a specific period. You can give out you can use the product or give it out to another for a fee. The person will pay you. Is that clear? Then the next one is trademark. Trademark is the distinction symbols, the designs, letters, brand names, or combination of all these things that we just listed, that aimed at what? Identifying a product from another. Trademark helps you to know the difference between this product and this product. Even when you bring they will tell you this one is paracetamol, this one is paracetamol, you'll be able to say this one is RMB, this one is what, this one is this one, this one is this one. Do you understand? All right, now let's go to franchise. Franchise is an arrangement between the government unit and a corporate body under which the latter obtains the exclusive right to carry out certain functions or provide certain services. It's an arrangement between the government unit and you, the business, the company, the corporate body, under which you obtain an exclusive right to carry out certain functions or provide certain services. Leasehold is when it's property. You can lease somebody's property and use it for your business. All right, let's keep moving. Here we have types of liabilities. We have types of liabilities. We have just two types of liabilities. We have long-term liabilities and we have current or short-term liabilities. Now let's start by explaining long-term liabilities. Just like the name implies, long-term liabilities are those liabilities that last for more than 12 months. Those liabilities that last for more than 1 year, like debenture, getting a long-term loan from the bank, is called, you classify them under long-term liabilities. Now let's move to current or short-term liability. With this short-term here, you'll be able to explain what it means. It means those liabilities that will not last for more than 1 year. It will not last for more than 12 months. And then let's say example, we have accrued expenses, we have creditors, we have some loans you get don't stay for more than 1 year. So you classify all these ones, your bank loan, your bank overdraft, all these ones, they are under what? Current or short-term liabilities. Now you have to know that balance sheet is very, very important. Balance sheet is very, very important. It helps us to ascertain the financial position of the business. And you have to equally know this: balance sheet is not an account. It's a statement that shows the balance remaining in the book. All right, thank you very much, and then have a great week.